Yesterday, the CPI data came in at 4%. That's right in line with estimates. Now, we are in a market that is a melt-up market. What does that mean? Well, it means shorts are getting scared. The bulls are gaining traction. They're getting very virulent. They're feeling like they can't lose. And again, that is causing a melt-up in the markets. There was money on the sidelines that was kind of concerned about what the Fed was doing. Now we're hearing that today, likely we will see a pause from the Federal Reserve.
Bitcoin's price has been pinned below $26,300 since June 10, reflecting a 14.8% correction in 2 months. Meanwhile, the Nasdaq Tech Stock Market Index gained 13.6% in the same period, indicating that investors are not exactly fleeing to the safety of cash and short-term debt. In fact, the demand for United States government bonds has been declining for the past 6 weeks. Hello, and welcome to Money Talks. In today's video, we have Gareth Soloway talking about the Fed stopping raising the interest rate and what the effect on the stock market and the crypto market. Gareth also shares his predictions for Bitcoin and more. So without wasting any time, let's get into the video.
Here's your Bitcoin chart. Bitcoin continues to hold my key support level here of around 25,700. This is still bearish consolidation. I still expect more downside. Target remains, and I've said this now for multiple weeks, you're looking at major support at 24,000. Now, the narrative here with crypto is nasty right now, and you can see it. I mean, this is the market where crypto should be ripping. When you see NVIDIA going up every day, when you see Tesla going up every day, think about 2021. Those were the stocks that were leading the charge there, but you had altcoins going up insane. You had Bitcoin, you had Ethereum running up, and they're doing nothing. All right, why is this? Thank you, SEC. Thank you, Gary Gensler. You have put the cap here based on so many uncertainties, whether it's with Binance and what the heck's going on there. Who knows even what's going on there? Filing lawsuits against Coinbase and everything like that, and basically not giving any clarity. Now, again, where is Bitcoin going? Well, one of the things we can see is that Bitcoin has done virtually the same thing that the 1929 market did with the collapse. This market in the Nasdaq has done, which every market has done, guys. So again, to see a bounce like this is not unusual, right? When you see a decline of this magnitude, you're going to get a technical bounce. Everyone at 30,500 was like, this is a new bull market. Crypto to the moon, crypto to a million, whatever it is. All season was going to come. I mean, I'm still waiting for the all season. I think most of us out there are. But the point again here is that you have to understand the way markets work is all based on this. When you look at millions of investors and psychologically, are they greedy? Are they FOMOing in? Are they fearful? Are they panicking? Right? Panic doesn't denote the beginning of a sell-off. It denotes the end. Think about FTX. When FTX came out and that collapse occurred, that was the end of that initial down move before the bounce. That was max fear. We're now getting into the beginnings, in my opinion, of the next wave. I don't think we're at max fear yet. I think you're still going to see more actions by the SEC, so there's probably more downside to go. Now, will Bitcoin take out the lows? I don't know. We're going to find out. I'm still in the camp that it could. All right, if you look at the dot-com market, and again, dot-com market's so similar to what happened in crypto. Brand new technology will change the world. Dot-com was the internet. Brand new technology will change the world and did. I think Bitcoin and crypto will change the world and is changing the world. It's just going through growing pains. So these are the types of things that I look at as a trader. I don't look at things in a FOMOing greed or fear mentality. I analyze that, and I analyze other people's emotion because it gives me an edge. I say, people are getting way too scared here. Let me go to the charts and start looking for technical support. Or at 30,500, wait a minute. The amount of greed that's in crypto right now is as robust as we were when we were at 69,000. If that denoted a top at 69,000 on Bitcoin, then it probably also can mirror a top here. And what happens? Bitcoin comes back in. It was also a major technical level as seen in the chart right here. So these are the things that, again, as a good trader, as an investor, you have to start paying attention to.
According to CoinShares' latest digital asset fund flows report, the sector's investment product outflows amounted to $88 million in the week ending on June 10. The substantial drawdown added to the ongoing 8-week streak of outflows. which now total $417 million. The 8-week cumulative outflows for Bitcoin reached $254 million, representing approximately 1.2% of the total assets under management. Analysts at CoinShares have attributed this trend to monetary policy considerations, as interest rate hikes show no signs of slowing down, prompting investors to remain cautious. Bitcoin has been trying to reclaim the $27,500 support for the past 2 weeks, but that might be harder than expected given the upcoming $600 million weekly options expiry on June 16.
So the market is kind of a little wary here. We've had these crazy melt-ups. The NASDAQ 100, we can clearly see here, had a big day yesterday. In fact, it looks like we're now negative by just a hair on the NASDAQ 100. And again, it's had such a massive move up that we're now at a point where the Fed has to deliver something dovish. They have to deliver. If they don't hike, which is what's expected, that's already built in, them not hiking, them pausing. But the question is, what are they going to say? Now, the Fed funds futures actually show rate hikes later this year, the market is expecting. So the market's expecting rate hikes to go up later this year, yet asset prices have gained so much value just based on the hope of money flowing into the markets from investors that are hoping for a pause and a loosening scenario. So there's this disconnect, right? There's this massive disconnect between what equity prices are telling us and what interest rates are telling us. And investors, smart investors, need to be paying attention to this. Now, in the Great Depression, we see that when it first started, what ended up happening? We had a big initial drop. And what I'm going to do is I'm going to draw trend lines here. We're going to draw a measured price range. So we're going to take the high to the low. Okay, so we dropped about 49% in that initial drop. You then saw another up move here, and let's bring that right back up here. We saw a bounce in that market in the Great Depression of 51%. So basically equal, right? 49 to 50%, 51% bounce. All right, so again, my point to bring this to your attention is that if you look at what the NASDAQ has bounced, or the S&P has bounced, or the Dow has bounced from our initial down move, these type of bounces, right? We're not up yet equal, right? And I want to make that clear. And I'm going to show you guys on the NASDAQ. In fact, let's go to this chart right here and bring up the NASDAQ. We'll look at Ethereum in just a minute here. But I want to actually go to the NASDAQ chart. Okay, and this is a really big, important part here. So what we can see here is if we go to our weekly chart on the NASDAQ, okay, in fact, we'll go back to the daily. We can look at it on the daily chart. We'll just zoom out a little bit. Okay, so here is your drop. And I'm just going to zoom out a little bit more so we can get the whole picture in. All right, so if we go to our price range and we take the highest point here to the lowest point down here, which was this point right here on the chart, that's a 37.5% drop. Now, if we also take that same low and we go to where we currently are, how much of a bounce do we have? We have about a 35% bounce. So 37 down, 35 to the upside. That, by the way, that potentially leaves us open for about a 2% more move to equal the down move. Now, the reason why I'm drawing this comparison is that there is this narrative that's being spun that a lot of you guys are falling into. And again, you could go back to 2007, you go back to 1999, the dot-com bubble. This is what happens to markets. They lure you in. The bears initially get the big drop. And then at the end of the drop, everyone else panics. Think about October of 2022. Everyone panicking. Think about in 1929, you had the stock market crash. Everyone panicked. Then you got the mega bounce. 50% bounce, folks. 50% bounce in the Great Depression off of the collapse in 29. Then the markets continued down more and more and more. You go here, you could see that same sort of thing playing out. And this is so psychological. It's human nature.
Here are the 3 most likely scenarios based on the current price action. The number of options contracts available on June 16 for call, bull, and put bear instruments varies depending on the expiry price, between $24,000 and $25,000. 0 calls versus 6,100 puts. Bears are in total control, profiting $145 million. Between $25,000 and $26,500. 1,000 calls versus 4,400 puts. The net result favors the put-sell instruments by $100 million, between $26,500 and $27,000. 2,200 calls versus 2,800 puts. The net result is balance between call and put instruments. This crude estimate considers the call options used in bullish bets and the put options exclusively in neutral to bearish trades. This oversimplification disregards more complex investment strategies. Still, traders should be cautious as the bears are currently in a better position for Friday's weekly options expiry, favoring negative price moves. Thus, an eventual sharp correction below $25,000 should not be discarded. So is it a good time to invest in Bitcoin? And what's your prediction for Bitcoin in 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.